Hello, we said that there are two methods for estimating our bad debt expense under the accrual method to come up with what the adjusting journal entry is. And the percentage of sales method gives you the adjusting journal entry, and then you compute the ending balance in the allowance for doubtful accounts, uncollectible accounts, or bad debts. But now we're going to take a look at those methods based on accounts receivable. And when they're based on accounts receivable, we know that the method is much more precise because we analyze each and every account receivable as to the likelihood that that customer is going to pay. So when we use the aging, we're going to take the ending accounts receivable balances times a particular percentage, and that's going to give us the ending balance, the EB. That means that we then have to reconstruct the allowance account, knowing that it has a beginning balance. During the year, we've had write-offs, we could have had recoveries, and we know what the ending balance is that we want. So we have to kind of figure out what that adjusting entry needs to be in order to achieve the desired ending balance. And so we must do analysis before preparing the adjusting journal entry. So you can see it's more accurate, but it takes a bit more time to do. So here's a problem where we're going to compare and contrast the two methods. One, the percentage of sales method. Oh, and they're going to use it net sales, which is based on 1.5% of net sales. And then we're also going to do an aging where we compute that the ending balance we want in the allowance account is 140,000. So let's draw a line down the middle. Percentage of sales method first, because we know that it's going to be 1.5% of net sales, 11,400,000. So the adjusting entry under the percentage of sales approach would be $171,000. Looking at the allowance account tells me the balance before adjustment is a debit balance of 48,000. We have an adjusting entry of 171,000, debit bad debt expense, credit the allowance. So our ending balance is going to be 123,000. Now, how could we have a balance in the allowance account that's a debit? Well, it simply means that we're not a very good estimator of our bad debts, and that during the year we wrote off more bad debts than we had previously estimated. In other words, we totally depleted the beginning balance in the allowance, which was a credit, and wrote off $48,000 more than that balance was. That's how we ended up with that balance before adjustment of $48,000. That's a debit. So notice the adjusting entry then helped compensate to come up with the ending balance of 123,000. Well, what would it look like if we did the accounts receivable approach instead? So remember, companies have choices. They can do either percentage of sales method, or they can do an aging of accounts receivable method to figure out what this estimate is. It's a choice. They don't do both, it's or, not and. So the allowance account, it says we want a desired ending balance of 140,000. So if I know where I'm going, I'm likely to get there. The balance before the adjusting entry was a debit of 48. So to make that ending balance happen, the adjusting journal entry that has to be made is debit bad debt expense, credit the allowance for the sum of those two, or $188,000. So by making that entry and posting that entry, we end up with the desired ending balance. So will the balance in the allowance account be the same or different? Well, again, it depends on the approach you use as to what the ending balance is going to be. The next video is all about how do you accomplish the aging process. And it's very similar to your homework. So see you soon.